Alright, hello guys and glad to have you on board again today. I generally don't do these types of things to react when the market is still hot, but I definitely had other plans for my evening, and therefore as I would be pretty much unable to be there if for some reasons the shit were really going to hit the fan, I'd really like you guys to be prepared for it. So first and foremost, whoever is in the Discord has been warned about these potential volatility by this morning. So I've told you to not pay attention to it, that if you really wanted to profit from it, you really would like to be very experienced and be ready to buckle up because of potential volatility levels. To quote myself, we can go down to minimum 25 to 35% to reach out potentially buyable territory. Well, guess what? We've just done it in a couple hours. No one would have thought that, not myself included, because I thought we could eventually set the course for a downside deterioration that could lead us to 25 to 35% drawdowns. Certainly wouldn't have expected this to occur in such a fast manner. So, have I ever planned such a thing? Oh boy, definitely not. So, do I give any credit or attention to whatever happens now? Not at all. I care about candle closes. So like I said, can we deteriorate prices to a point that the daily chart may retrace 20 to 30%? I still believe we can. So if you figured out for some reasons that today is going to be a lower shadow candle, so we're going to surge to the upside, this is just a flash crash due to over leverage, whatever stuff that is, congratulations, you just fell for yet another narrative, which means you are trading because of an unreliable and trustless information, which means, well, you just done what every stupid gambler is doing. You trade out of unverified information or gut feeling or whatever that is, but that is certainly not something that you can replicate over time. That's not what professional traders does. And that's certainly not what's going to bring you returns over time. So please stop doing this once and for all. Instead, you'd rather like to put some rules into your trading behavior to, first of all, avoid falling for informations, secondly, avoid falling for emotions, and third, bringing a little bit of consistency and statistical, relatively useful stuff for your trading activity over the long term, okay? If you change the course of a study, that means you're not studying anything, okay? Just, I don't know, go for medical research or whatever that is. I mean, a researcher knows that you need to define a clear set with clear boundaries, set of experimental features, so that you can actually study whatever you're doing. If you're changing the set of rules each and every day, you're basically doing nothing but science. Okay. Anything but not science. Okay, anyway, so let's try to put a little bit of math and science into trading, because that's really what professional traders are trying to hedge over the others who are gambling. So regarding my personal strategy, which is my point of view in the market, definitely not the only one, okay, but that's far better than trusting whatever you've just read on Twitter or whatever you thought this might be the cause of, because no one gives a fuck, okay? I don't nearly care about what has been driving this downturn. I mean, is it even a downturn? That's the actual question I'm really wondering at the moment. So let's try to answer that question with a risk limitation perspective. Let's try to use my framework of market readings, the one I use each and every fucking day, and try to see if that can bring any answer to these questions. Okay? So first of all, I need to try the reference time frame. So I'm going to make a quick study in here because I don't have that much time. So I'm basically going to use the crypto total as a reference. That is definitely not the best case stuff. You should definitely do this thing on a coin-to-coin basis to figure out, because I've always made it clear we're very likely going to get a K recovery. Some coins will definitely not manage to go retrace all-time highs, and they will dry out of liquidity over time and basically die, and some others will rapidly manage their way right up over all-time highs and succeed attracting capital and maintain attraction over time. So there will definitely be a need to look for specific reactions within the next few days to know which one is belonging to which option of these two. Is it even a choice? We'll see all about that. It's potentially everyone's going to recover. I mean, I don't know. It's just a speculative behavior. So like I said, very likely, I don't expect a global market reaction out of this, more like a scattered reaction. Some coins rapidly perform again, some others fail to recover and will lack of attention over time. That is my bias right now. Anyway, that is a bias. So what else do I have to deal with? Well, I'm going to use the crypto total as a reference, and this is an assumption, okay? So in a global crypto manner, do we change things? Let's answer that question. Okay, so what kind of context do we deal with? I'm going to start with larger time frames, okay? So we at least look at something in which whatever just happened feels like it doesn't really change the game, okay? 4-hour chart might be a little bit more like, well, boy, do you often see these types of things? Not really. So anyway, if you wanted to start the analysis with a 4-hour reference chart, let's do it anyway. You'll see that the set of rules I have will anyhow and anyway lead me to larger time frames. So let's keep it going. What do we have? Oh boy, squeezing pattern, which means we were definitely freakingly bullish and that there was barely not even a bearish momentum. What have we done on this time frame? Going from overbought territory to oversold territory, which I call the brainwashing machine. Basically, I don't know whatever happens, but it's very likely on the higher time frames that the true party is at play. So I'm sorry to say it, but this plus this plus this just gives me to one and only conclusion. I don't know what that is, but it is anyhow and anyway happening on the higher time frame. So daily, okay. Here we go. Here I can see market is going sideways. The moving average is below the context, but the contexts have been reversed. This is very likely an intermediate trend range, though, oh, I'm sorry, there's still trend, boys. Otherwise, the moving average wouldn't be there. So the moving average is attempting to trade on the lower boundary in here, which means the only thing that matters to me is to give any rational sense to this thing, but it's very likely going to bring up trending context behavior rather than range. But still, let's assess what this is all about. So in this thing, okay, did we retrace more than 23%? Did we close below 50% context? Yes, we did. So this is a pullback. Can I figure out the previous range? Yes, I can definitely see that there was a range in here. Can I figure out the breakout phase? Yes, it is. Okay, I've got a mature trending context, range, breakout, market top, pullback. So where's the final excess? I have no final excess, which means, oh, sorry, boys, there is still potential on the daily chart time frame. We are still expected to go one step further down the road, normally trading above the resistant context, making new all-time highs, and trading above the higher time frame context as well. So yes, still upside potential. Sorry, guys. But anyway, any trending context needs to be verified with a fourth condition that is absolutely mandatory. We need to look at the higher time frame anyhow and anyway to just make sure there is not multi-time frame trends at play. Weekly charts. Oh boy, I'm sorry. There is a big range. There is a big breakout. Oh boy. Okay, moving average is below the context. So there is a weekly trend, boys. Sorry, I can't put it in another words. This is my strategy. I'm not inventing anything. Any market I would have in front of my eyes that does that would be assessed to be a fucking trending context. So we have multi-time frame trends, and the weekly chart in here, has it done its pullback? Yes, eventually as well. So we might have a double pullback in which the daily chart is pulled backing in the same time as the weekly one, which is not something I've seen multiple times. But there is a breakout. I mean, look at this. Cycles are broken. There's not even a chance it could be differently. So there's one thing that doesn't match the plan. Normally, in a pullback, cycles, okay, trend cycles are supposed to terminate a downside oscillation, which we did not. So we certainly had a daily pullback. No problem with that. The weekly pullback has respected some of the rules. It somehow managed to retrace down the 50% line. But we never closed below. I mean, so far we did make a few closes below the 50% context, but we certainly haven't closed the context below, okay? So we will close this context when we'll switch to October. So if we retrace down there till we close October, that means we will make the final stuff we have assessed, one probability of one context that I know, not a very familiar one, not one that occurs very often, but we will have a double pullback. The daily pullback will have created a weekly pullback, which means we will very likely spend a bit more time, enough time to terminate a bear cycle, and afterwards, we'll still have to make a final excess. So either that is the daily chart that is going to be our trend reference, or the weekly one, which is still unconfirmed at that point. Both end up the same way. Either we're going to spend some more time in here, but there will still be some upside potential later down the road, as the likelihood to break the range we might be building will very likely be to the upside. Or we just made a daily pullback and we have to make a final excess anyway. So we end up with the same conclusion. It's just a matter of timing. Do we have to buy this area? Certainly not, because it comes with a lot of risk. If you buy out there, there is still a reasonable probability that we're going to build some kind of a range. God knows what structure this range could take, because ranges can be complex. So now let's study that range and we'll be done. The range is now settled on the daily chart for now. So do we have a bearish range? No, we do not. We had the probability to set one in here. The market didn't even give a fuck. So anyhow and anyway, that's a neutral range. And this range has retraced right up to the previous high point. So you cannot trade this as a bearish opportunity, because that's not part of my strategy. Because out there, multiple things can happen, but there is not enough statistical advantage to try taking advantage of this opportunity of short selling out there. Because lots of things can happen out there. Either we're just going to squeeze the third range boundary, which means we simply don't care about the area and we're going to break all-time highs. Option number two, we're going to do anything else like a double top, so we can potentially retrace right down to the previous bottom. Or we can do any other potential structure like rectangle, triangle. We build a higher low point, but we fail one more time into the same horizontal level before eventually breaking it up later down the road. We can do any other stuff in between, like random chaotic stuff, which neutralizes on the average prices of that range. Basically, there are so many possibilities for this range to structure itself that if you try to anticipate or even profit from this potentially market top area, well, what's your plan? Where do you profit take? What's your target? So I don't think it's worth selling this area, but it's certainly not worth buying either. And that's exactly what I tried to tell you guys this morning. It's an area in which no one's buying, but no one will likely sell either, which means there will be little volume, there will be a lot of short-term speculation, and there is goddamn leverage in this market, which can create short-term volatility. So this area is tricky, and we're going to pay attention to the market candle closes. Daily ones at least, weekly ones as well. Until then, is there a real bearish risk to this market? I'm sorry to say it, I don't see any of this. The only thing I see is an upside potential that has just uncertain timings. Just a matter of time, or do we do it now, or do we do it later down the road? But are we going to break higher on the all-time highs? I'm sorry to say it. It is what my strategy tells me to trade. So am I going to buy this very short-term burst of liquidity, or I don't know, leverage, margin calls, whatever that happened? I don't nearly pay attention to this. The only level that I care about is, do we retrace to the trend channel in here, where I will potentially find some viable prices? Okay. That is, by the way, my weekly plan. If we retrace to the 1.7, 1.6 trillion mark, I would definitely consider a buy price. Until then, whatever just happened, I don't know, short-term volatility, maybe something that will be erased within a couple of days, maybe something that will set the start of a further down the road consolidation toward these levels. Whatever that is too complex to actually try to profit from. So try to make it easy. When there is no statistical answer to a question, means chaos is at play, and chaos is not something you want to gamble on. Just let it play and move on to some other time frames, or just be patient. And that's the only thing that happened today. I don't know what that is. I probably wish that when you clicked that video you wanted an answer that I simply cannot bring. I don't know what happened. No one knows. Those who will give you an answer are probably assholes. So what happened is short-term volatility. So either you're a volatility trader and you have to be goddamn experienced to face such a market, or you just let it happen. If you weren't using leverage, none of what happened today should be a problem. I personally haven't even tried to profit from this. And well, I'm fine with that. Some people maybe have done. I personally have bought cheaper prices than the one they bought today. So I personally don't really care about prices that have been offered today. I haven't bought any of these prices. The only prices I bought are these ones. In these areas, the only things I've done is arbitraging the market. That was buying a coin and selling Bitcoin on front of this. Which means whatever happened today didn't margin call me. It just barely drove down my margin because, well, of course, alt versus BTC have suffered a bit today, but it's not nearly going into invalidation territory. So this arbitrage trade is still going on. And I'll see within the next few days. If that was a bad call, I'll have to trigger a stop loss on these trades. End of the story. Is it going to stop the long-term investments and so on? That's definitely another pool of liquidity. Though it's not going to change anything to my plans so far. The plan remains the same. Mid-term to long-term potential is still to the upside. Whatever happens in the short term is either we're going to delay the breakout to new all-time highs, or this was just short-term volatility and we're going to do it within the next few days and weeks. I'll have the answers by then. Until then, I'm looking at the candle closes, dailies and weeklies, and nothing else matters to me. Bye, guys.